Hey, this will be a video chart on ENTI, Encounter Technologies Incorporated. Been a little while since I've done this one, but I've been getting a lot more requests from some people that are kind of worried and so forth, and I can kind of understand why, but just right off the bat, if you're playing this from the daily chart, the chart is still going in your favor. There's no need to freak out or anything like that. If you're a day trader now and you maybe bought up here, then yeah, the chart's probably not looking too good for you, but I do want to make that clarification up front. If you're playing this for more of a long-term swing trade, or if you're playing this because you like the company, the daily chart is still in your favor. If you're a day trader, then yeah, these past rough days or red days have been probably pretty rough for you. So let's kind of go over what's been going on with the chart. The first thing is kind of just to note this pattern up here. This 009 level is the resistance, and that's the key level that we do want to eventually hopefully see the bulls get through. So 0.009, or I guess technically 0.0091, is the key area of resistance that you want to see the price work its way back through. Now the key thing about the chart, and like I said, this is why you don't have any reason to freak out for the time being, is because of this green line right here. Actually two green lines, but the first one is based, it's kind of hard to see, but back behind here it says 0.0049, and I believe this high right here was 0.0049 or maybe 0.005. And then we also have this other green line right here, and this is the 200-day simple moving average. And for those of you that use technical analysis and charts and so forth, you know that the 200-day is one that pretty much everybody has on their chart, so it's one that carries a lot of weight. And what we're going to do here, or what I'm going to do, instead of just picking one of these as the support level and then creating an argument, I'm just going to call it a support zone. So right now we have a support zone between 0.0049, which once again is behind there, and then also right here at the 200-day simple moving average, which is valued at 0.0055. So between 0.0049, 0.0055, that is where you want to see, and there needs to be a lot of good support, and so far so good. If you look at today's action, you can see the wick drop down here into this area, and then the bulls were like, all right, bears, that's far enough, and they pushed it back up by the time the day ended. So so far so good. And next week, if the price continues to pull back, this is the level that ideally you want to see the price bounce around before hopefully making another push back up. Now if the price does drop below there, more than likely the price will probably come down here and at least test this white line here, which is the 50-day simple moving average. So like the 200-day, a lot of people use the 50, so this is one where it does contain the self-fulfilling prophecy type effect, but the 50-day is currently valued at 0.0034. So if, like I said, the support zone up here cannot hold, I would look for 0.0034, which is once again the value of the 50-day simple moving average to be tested, and hopefully that'll then hold up. The other thing that I do like about this current action is when you look up here and see how the price has been going sideways, you look at the corresponding area down below, and you can see that the volume has clearly been declining as that's been the case. And that's what we want to see. We want to see volume declining when this price is going sideways. If the volume was staying really heavy and so forth and it was going sideways, that wouldn't be such a good sign. But this is just good. Looks like simple profit taking, working on building the higher base. But this lower volume pullback, along with the sideways price action, nothing to worry about, especially when you're talking about a volume standpoint. Real quick, looking down here at the indicators, it would be nice if we could see the stochastic get a bounce off of 50. As long as this remains above 50, the bulls are going to remain in charge. And with the MACD, things are still looking good, but you don't want to see these bars drop below the zero line. We want to see these hopefully start to grow here in the coming next week. But price and volume are king, and so far the price and volume are acting the way you would want them to. So nothing, no huge red flags or anything like that. If there are any other questions on the chart, please let me know. If not, I'd encourage you to check out bullwarriorstocks.com. If you go there and sign up for the free newsletter, you'll be sent a free ebook, and then with your newsletter subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from penny stocks up to big boards. So there's a good variety, something for everybody, and it's all free, no strings attached. We've been making some good money together with our trade alerts and so forth. So I'd encourage you to head to the website, sign up, and see what it's all about. One last time, this was ENTI. Thanks for listening, and enjoy your weekends.